I buy residential mortgages. So instead of buying the property, I'm actually buying the mortgage attached to the property. Essentially, I don't own the property. I own the loan, like the financing behind the property. And
Correct.
so it's a similar kind of idea with what you've got, where if you're splitting up tokenization of owning the property, you don't necessarily own the whole thing individually, but collectively, that's how it comes together. And so it's similar in that way where you're owning it without owning it. And that's,
Normally partner with others to altogether pool your resources, so purchase mortgages. Is that how you go about it?
yeah, I have a Regulation D fund. So investors can put their money in that. It goes into one big pool. And then with that money, I go out and buy whatever mortgages I can find.
Welcome to Concrete Build Crypto Financing, where we explore the intersection of real estate and crypto financing. We invite leaders, experts, and both real estate and crypto investors on our show to gain knowledge into the revolutionary new field of tokenized real estate. First, here's a word from our sponsor. What if you could invest in real estate with just a few clicks? Introducing Concrete Build, CBLD, where real estate meets blockchain. With CBLD, you can fund and own a stake in tokenized real estate backed by cutting-edge 3D printing and commercial properties. Earn passive income, invest securely, and help solve the housing crisis. The future of real estate is here. Are you ready? Invest today at concretebuild.org. Concrete Build, tokenizing properties, tokenizing wealth. And today, I would like to introduce my guest. My guest tonight is Nathan Turner. He is an expert voice in the field of note investing. Nathan's Earnest Investing specializes in the note industry, and we are delighted to have Nathan here tonight. Please join me in welcoming Nathan Turner. Thank you
Hello,
for
hello.
joining us again, Nathan. So I like to ask all of my guests this
Yes.
question. What do you see as the future of real estate, and how does crypto financing play a part in that future?
This is a great question. So, first of all, thanks for having me. This is great to be here. For the future of real estate, it's really interesting. I'm seeing a lot of change in terms of where the financing is coming from and how people are being able to acquire property in the first place, how they're able to get loans to be able to live in them, and then different ways like with the tokenization. That's a really interesting way to get into owning a part of a property where you don't have to necessarily own the whole thing. Maybe you
Right.
don't have that much money. A lot of people don't, and that's okay. But this is a great way to get into a piece of a property. So I love what you're doing, and what I'm doing is similar, but a little bit different.
Well, tell me a little bit about what you're doing.
So I buy residential mortgages. So
Mhm.
instead of buying the property, I'm actually buying the mortgage attached to the property.
Okay.
So it's a similar kind of idea because um, essentially I don't own the property. I own the loan, like the financing behind the property. And
Correct.
so it's a similar kind of idea with what you've got, where if you're splitting up tokenization of owning the property, you don't necessarily own the whole thing individually, but collectively, that's how it comes together. And so it's similar in that way where you're owning it without owning it.
Do
That's
you
really cool.
partner? Do you normally partner with others to pool your resources, so purchase mortgages? Is that how you go about it?
Yeah, it's a Regulation D fund. So investors can put their money in that. It goes into one big pool. And then with that money, I go out and buy whatever mortgages I can find.
How long have you been doing this, Nathan? This sounds interesting.
I got started in 2009, 2010.
Okay.
Back then, it was all about non-performing mortgages where people were already not making payments. And
Mm.
that was very interesting. Price points were fantastic and we could get in really cheap.
Yes.
The beauty was because we had so much flexibility, I had tons of opportunity to be able to help people to not lose their home so they could stay in their
Okay.
home and start making payments again. Where because I'm not a bank, I'm way more flexible. So
Mm.
that was really rewarding. We've shifted gears now just because of market conditions where I'm buying performing notes where people are making regular payments. But it's
Okay.
the same thing. We're doing a lot of seller finance paper where same thing. They're not going to a bank. They're doing their deals with, individuals working with individuals. And I love that.
And what's the benefit to the individual, to the, say, the homeowner for having you versus the bank? Either, no. Oh.
Yeah, I think the biggest advantage is I'm not a bank. And so if there's some kind of an issue, when they call, they're talking to me. They're not talking to, an offshore call center or something like that and being rerouted 50 times before they actually get any kind of answers. I'm having a one-on-one conversation saying, okay, so all right, we've hit a snag. There's some kind of a roadblock. How are we going to figure it out? And collectively, we can come together and in one or maybe two conversations, we can figure out how to get back on track. And it's just, we're far more flexible. So I can be a lot more
I really love that. I
accommodating.
love the concept that you're really out to help the homeowner stay in their home. I
Right.
wish more people or more banks really were that caring and understanding. So tell me, how do you find these mortgages? Do you, go to banks, go to mortgage lenders, or do the homeowners themselves reach out to you?
Not necessarily the homeowners, but the lender behind the property. So
Mhm.
again, seller finance is a lot of it. So say somebody owns a second home, maybe they inherited it, they acquired it somehow or other. Instead of renting it out, they've sold it on terms, creating a loan. Could be a mortgage, could be a contract for deed of
Okay.
trust, depending on whatever state you're in and the situation. But then essentially they've created a loan. And then I come in, I purchase that loan and I cash out whoever the lender was at that point. So now they're made whole. Anything that they wanted to get out of that, instead of collecting over time, they've gotten this lump sum. I now have that right to collect those payments over time.
Who makes money here? Because it doesn't sound like anyone's making money. You explain to me the financing of this or the profits.
Right. So the way it works is anytime that I'm buying one of these loans, I'm buying it at a discount.
Okay.
So if the posted rate on the note is seller finance tends to be higher between 8 and 10%.
Mm-hmm.
So let's call it a 10% loan. I need at least a 12% return on my investment as a yield, not necessarily an ROI, but as a yield calculation. It's more like an IRR, where so in order to get to my 12%, I'm going to have to give some kind of discount. So if it's a $100,000 balance, I'm probably going to pay somewhere around 80,000.
Okay.
So that's how I
Interesting.
make money.
That's how you make money. I got it. What's in it for the lender? Why would they want to sell it to you at a discount?
They are looking for a lump sum of cash today versus those payments over time. And in the case of individuals with seller financing, that could be for all kinds of reasons. They've got, a kid going to college, they've got a different business opportunity, they've got, I don't know, renovation on property, whatever case might be.
Mhm.
That's why they would want to get rid of that. Maybe it's family situation and they don't want to deal with, an in-law that is the person making the payments. That can get awkward around Thanksgiving table, things like
Right.
that. So all kinds of reasons, but essentially they're looking for that lump sum of cash.
That makes sense. Prior to the to us recording, you mentioned something about mortgage fractionalization. Explain a little bit more about that and how does that play into tokenizing real estate?
I know tokenization of property is also very new, but I think
Very
this
good.
is I don't think it's been perfected yet, to tell you the truth. There's some concern still on, and I have talking to one group that are doing this where they have been doing the fractionalization of the loan itself. My concern with it, and I don't know the answer on it yet, is how is that not an SEC violation?
Got it.
Because then you're sharing in a loan versus a property. That's a little bit of a different animal. And so that's the piece that I don't know. And I'm dying to have another conversation with these guys to figure out how they're doing it. Because I think it's fascinating. I think what a great way to get into any
So
kind of investment.
how is that different than what you're doing? Because you have investors, correct? But you
I
say
have
you're
investors,
under Reg D.
right? It's a regulation D fund. So they're putting their money into that pot. I'm going out and buying whatever loans that I can, but
Okay.
it's all in the name of that entity.
Got it.
Of the fund. With the tokenization, you're talking about individuals coming in and buying pieces of those loans. So
Correct.
that's a little bit different. That's breaking it down that much more. And so that's the piece where I need to understand it better.
Right, right. Well, I'll tell you a little bit about how tokenization of properties works. And so
I love that.
basically,
Yeah.
the token or the coin will
Hmm.
purchase the property and then split it up in smaller coins. So it's
Okay.
basically like you're purchasing a stock. So it's
Oh, okay.
very similar to in that respect. So the
Yeah.
coin owns the property, and then the coin then is can be tokenized uh, in smaller pieces.
Wow,
Yes.
that's brilliant. Yeah, I
Yes.
love that.
Yes. And that is also brand new. I really truly believe that crypto financing is the future. Have
Mhm.
you looked into any of that for yourself as far as
I've
looking at
barely scratched the
crypto
surface.
investors?
Yeah, barely, barely, barely. It's not something I've bought yet, mostly because I haven't taken the time to understand it well enough to really get my
Mhm.
head around it. Busy enough doing the things that I'm doing, and I love what I do. And so it hasn't been something that I've wanted to take time out to really study. But I
Got
love
it.
what you're doing. What a brilliant idea. I love it.
That's wonderful. You did mention also prior to us recording about a conference. You want to tell our viewers a little bit about this conference, where it's at, what are the dates, how they can
Sure.
find out more?
Yeah, it's called the Diversified Mortgage Expo,
Hmm.
and it's coming up May 2nd and 3rd in Nashville, Tennessee.
Okay.
And it is just everything notes. So this year we're actually kind of leaning into that idea of diversification. So we're talking about different ways that you can get into notes versus I mean, it's already a fairly small niche business, but
Yes.
within that niche, there are niches. You know, you can specialize in second lien mortgages, or you can do just land, or you can lend on notes, there's all kinds of different things that you can do. And so we're going to be discussing that a little bit more this year, but
How
really
many
excited to do that and can't wait. It's coming up soon.
how many exhibitors are you expecting? How many total attendees are you expecting at this conference?
Yeah. So vendors, we've got over 20, 25, 26, something like that, about 30 different speakers. Last year's attendance was about 225. So we anticipate something a little bit more than that, maybe around 250. But, time will tell. We'll see once all the tickets are sold, then we'll know.
Wonderful. Well, I wish you the best on that conference. So tell our viewers a little bit about your specific company. It's called
Earnest
Earnest
Investing.
Investing. Earnest
Yeah.
Investing. Tell me a little bit about Earnest Investing and what
So
how they can reach
yeah,
you.
Earnest Investing, that's kind of the parent company. That's our fund. So it's set up for accredited investors, people who want to just park their money and not have to think about it. It's a fantastic IRA investment where they can just set it and forget it. We pay an 8% annual return, quarterly distributions, and it's very well secured. The note is all secured by the property,
Yes.
each individual note. So we're widely spread out and helps to mitigate that risk. But that's that information on that's at earnestinvesting.com. There's a link there to the conference, diversifiedmortgage.com. And so it's all there. That's the place to go.
Wonderful. And we will be sure to put that link in the description for our viewers.
Perfect.
So thank you again, Nathan. I just wanted to wrap this conversation up with a nice little bow, reminding everyone that not only is the real estate industry and the mortgage industry looking at some new innovative ways, but so is crypto and crypto
Yeah.
financing and how it all ties in together. And anything that's backed by real estate is obviously going to do really well.
Right.
As real
Yeah.
estate is here to stay. So, to our guests, thank you so much for joining us. Remember, concrete build, tokenizing properties, tokenizing well.